Warren Buffett has made another move. This time, he sold over $75 billion worth of stocks, including a significant portion of Apple shares. Yes, the Oracle of Omaha now holds the largest cash reserve of his career. Just how much is it? Berkshire Hathaway's cash reserve now stands at $277 billion, surpassing the combined cash reserves of Apple, Microsoft, and Nvidia. Quite astonishing, isn't it? Over the past 2 years, we've witnessed his cash pile continually expanding, but recent figures are truly jaw-dropping. His cash soared from $189 billion to $276.9 billion, faster than my own stock losses. This raises the question, why is Buffett amassing so much cash? Does he foresee some major economic issue on the horizon? Or is he simply waiting for the market to offer discounts before buying? In today's video, we will delve into this topic. Before we dive into the main content, could you click subscribe and follow me for more high-quality content? Let's go back to 2007. At that time, Buffett also held a large amount of cash, and then the global financial crisis hit, with the US stock market plummeting by 60%. By 2009, he began purchasing stocks aggressively at low prices. Fast forward to the end of 2021, Buffett's cash reached another historic high right before the market peaked and dropped by 20%. Is this just a coincidence or a masterstroke? Don't rush to panic, it's not that simple. Looking at Buffett's total cash reserves alone is inaccurate. After all, Berkshire Hathaway isn't a small company from the 90s anymore, so having a lot of cash is normal. The key is the proportion of cash to total assets. Over the past year, Buffett's cash allocation has indeed increased, reaching its highest level since January 2006, 2 years before the 2008 financial crisis. But don't misunderstand, during these 2 years, Buffett was actually increasing his stock investments. This indicates that he didn't have insider knowledge about the 2008 financial crisis in advance. Back in 2000, Buffett's cash ratio was pitifully low, and then the dot-com bubble burst, and the market fell by 50%. If he could truly predict the future, why didn't he stockpile more cash back then? Buffett himself has repeatedly said, "I never make investment decisions based on economic forecasts." He's even joked that hiring an economist is like hiring a fortune teller, amusing but useless. So why is his cash reserve so high today? It's not because he thinks the world is ending, but because he believes current market valuations are too high. His favorite indicator, the so-called Buffett indicator, has sounded the alarm. This indicator measures the ratio of the total stock market value to the US GDP, currently at its highest level since 1947. Translation: the market is ridiculously expensive right now. Buffett's investment philosophy is simple: buy excellent companies, but at a low price. This is what he learned from his mentor Benjamin Graham, who said in The Intelligent Investor, "The market oscillates between overvaluation driven by greed and undervaluation driven by fear." What should a smart investor do? Accumulate cash when the market is expensive and buy when it's cheap. Currently, cash yields 5% due to high interest rates, while the S&P 500 yields only 3.6%. With cash being more favorable, why take the risk with stocks? Of course, this doesn't mean Buffett can predict the market's next move. He's not waiting for a crystal ball to give answers. He's waiting for a good bargain. After all, even the Oracle of Omaha can't resist a great clearance sale.